overall currency impact, safe haven flows into the dollar and into the yen, but it was really quite minor. I think there is clearly no perception yet that UK exit could trigger a breakup of the euro. If that had been the case, then the euro would have weakened significantly, maybe not relative to the pound, but relative to the other currencies, and that hasn't happened. So there's still this belief, I think, at least as seen by the market, this is an isolated phenomenon, that this is not the beginning of the end for the European Union. And even if that is correct, it may well be, I think my central scenario is that we won't have systemically important further breakups. The risk is material, it's not a tail risk, and we don't see this risk priced in either the euro currency or indeed any of the currencies that would be the alternative to the euro should there be a material risk of breakup of the eurozone. The return to capex, right, are going to be lower, at least for a long transitional period, until the new trading arrangements are in place. I think the financial stability and availability of funds part of the crisis has been handled extremely well. The Bank of England made it clear already before the Brexit vote, through these what they called indexed long-term repo operations, that they would make sure that no systemically important entity, financial or real economy, would find itself in a financial crunch. The Bank of England has clearly been holding hands with the Fed, the ECB, the Bank of Japan, probably the Swiss National Bank, through swap lines and other forms of contingent credit lines to ensure that foreign exchange of whatever currency denomination would be available. So there's no shortage, if you want, of funding. If the opportunities for profitable investment are there, then funding will be available. This is not an emerging market crisis where you have a sudden stop and the current account deficit has to be closed overnight and the economy goes into immediate deep recession. This has been, from a financial stability perspective, it has been handled extremely well. But even if you prevent the crisis, there's still an objective worsening of the trading environment for years to come, and that will take its toll on capex and deal making. But shortage of funds, no, not an issue.
Mm. I think one thing that surprised us has been the capital markets seem to be open remained open as well. I think our capital markets guys thought they'd take an early summer holiday after the referendum, but activity has been very high, both ECM and DCM. Bank funding's been available. And as I've said, there's quite a lot of deal activity as well. Now, how much of that is opportunistic based on the currency? How much of it is genuine? Too early to tell.
Even if it's opportunistic, right? The markets are there. It's functioning. Funds are available. So there's no financial dysfunctionality as a result of this.